Hey, it's Mike Lynch with AmeriFirst Financial, and it's time for your Monday morning mortgage update for the week of March 15th. Hope everybody's doing great. Hope you had a wonderful weekend. Had a little bit of sun, had a little bit of rain. It was fantastic. Got outside, worked a little bit, and actually got to see my folks for the first time in months. They finished their second shot, and so had a great dinner with them last night. And got to see our son, and we haven't seen him in 1 year. So things are starting to get back to normal. I hope the same for you as well. Okay, so let's talk about the market and what's happening. A lot of stuff to cover today. So last week, we saw another week of mortgage rates going up. The good news is they didn't go up as much or as high as they did in previous weeks. So it was a modest increase. But let's keep this in perspective. Rates are at historic lows, and they're still in that mid to low 3% range for a 30-year fixed primary resident mortgage. So what are we looking at this week? The three things. Actually looking at four this week. Second and non-owner occupied home loans. Big news on that. Central bank meetings, stimulus, and inflation. So the end of last week, the FHFA, they buy a significant amount of mortgages that are sold in the US. So basically the way that the mortgage industry works is there's a primary bank of lenders and a secondary bank of lenders. And all the primary lenders are the ones you and I go to get a mortgage. And their business model is to fund and then sell that loan on the secondary market. And the second investors, they service those loans and they buy those loans and really make their money off the long term. Well, the FHFA buys a significant amount, Freddie Mac, Fannie Mae, a significant amount of mortgages. They announced last week that they're going to drop the amount of second home loans and non-owner occupied loans that they purchase from 9% to 7%. So that's a 2% drop in the amount of loans that they're going to purchase. Now, they don't buy all non-owner occupied or second home loans, but they buy a lot of them. And this is a really big shift. And so what that means is if I'm a primary lender and I fund a second home or a non-owner occupied loan on the primary market, I can't sell that loan now, or the ability of me to sell that loan is going to be much, much harder to sell it to the people I want to sell it to. And so what you're going to see is lenders now, and that's already started on Monday, is they're going to make it harder for our buyers and our borrowers to qualify for a second home or non-owner occupied loan. They're going to add a lot of overlays. They're going to make the conditions much harder, increased reserves, increased down payment, increased FICO scores, just a whole multitude of things that are coming down the pike. So our buyers are going to have a tougher time qualifying for these home loans. Sellers are going to have a tougher time selling these properties as second homes or non-owner occupied home loans. So again, a big, big impact to this part of the market, and we'll talk about what you can do to prepare for that. The next thing to talk about is central meetings. So three big economies are having their central bank meetings. The U.S. is having its quarterly meeting the next couple days, Bank of Japan, Bank of England. So our FOMC meeting starts tomorrow. It's a 2-day meeting, and they're going to come out with a report after Wednesday on what their economic projections are. This meeting, they actually release their economic projections. And really what we're looking for is how is all this stimulus, the last big one, 1.9 that just passed, but all these other stimulus, how is it impacting the projections of the economy? And let's be honest, the economy's doing much better than it was last year at this time when it was shut down. The large percent of the population is getting vaccinated, and that's only going to increase. Stimulus money is hitting bank accounts. So there's a lot of things positive for the economy. And when we see a growing economy going up, we see mortgage rates go up because they don't have to stay low. So those reports that are coming out it could have a big impact on rates this week. Stimulus. So we know the 1.9 stimulus, Biden signed it, that $1,400 checks hitting pocketbooks in the next week or two. Unemployment got extended. So how will it impact the economy? Will it really promote growth in this economy? It looks like it will, and that's going to be negative for bond pricing. Interest rates are going to go up. And the other thing is, what's next? How are we going to pay for all this stimulus? Increased taxes, infrastructure spending. That's another big bill that's coming this year. Minimum wage, is that going to be a federally mandated minimum wage? They haven't forgot about that, even though it didn't make the 1.9 stimulus bill. So the bond market really hasn't priced that stuff in yet. And remember, mortgage-backed securities are traded in the bond market, and that affects mortgage rates. So once the bond market starts to price in those what's next, we could see those rates go up even higher. Okay. And then the last thing is inflation. Been talking about inflation for weeks. It's absolutely on the rise. We expect inflation to go over 2%, really peak middle of the summer and maybe flatten out or come down a little bit. But that inflation in the coming months is going to drive our mortgage rates higher. So we just are in an environment of increased mortgage rates, much more stuff coming down the road that has an impact to the negative to mortgage rates going up than has a positive of those rates going down. It's definitely a shift in the market. So quiet day today, quiet week really as far as economic reports. However, we do expect some volatility midweek once we get some of the FOMC meetings coming out. So we're going to start today carefully floating, probably moving into a lock position, if not by the end of the day, tomorrow, and definitely midweek. So if you got clients out there that are floating their loans, please tell them, get that thing locked as soon as possible, because we're probably going to see rates get worse. If you have any questions about second home loans or non-owner occupied home loans and how this change is going to affect your borrowers qualifying, your buyers qualifying, please reach out to me. I'll be more than happy to share information with you. If you know somebody that could benefit from this video, please forward it to them. Have a productive and wonderful week, and we'll talk to you next week. Bye-bye.